In this video you will learn about income from other sources. What is income from other sources? The Income Tax Department classifies income into 5 categories for streamlining the process of income tax reporting. They are 1. Income from salary, 2. Income from house property, 3. Income from capital gains, loss, 4. Income from business and profession, 5. Income from other sources. Income from other sources. This is the last and residual head of charge of income. An income which does not specifically fall under any one of the preceding 4 heads of income, that is salaries. Income from house property, profits and gains of business or profession or capital gains, is to be computed and brought to charge under Section 56, under the head Income from other sources. Government securities. Following are government securities. Securities issued by central government or state government are of 2 types. A. Tax-free government securities. Interest on tax-free government securities is exempted, so it is not included in the income of an assessee. Some government securities have been declared exempted from tax under Section 10(15) of the Income Tax Act, namely, 1. 12-year National Saving Annuity Certificates. 2. National Defense Gold Bonds, 1980. 3. Special Bearer Bonds, 1991. 4. Treasury Savings Deposit Certificates, 10 years, 5. Post Office Cash Certificates, 5 years, 6. National Plan Certificates, 10 years, 7. National Plan Savings Certificate, 12 years, 8. Post Office National Savings Certificates, 12 years/7 years, 9. Post Office Savings Bank Account. Exempt up to 3,500 Indian rupees in single name, up to 7,000 Indian rupees in joint name. 10. Post Office Cumulative Time Deposits Rules, 1981. 11. Scheme of Fixed Deposits Government by the Government Savings Certificates, Fixed Deposits, Rules, 1968. 12. Scheme of Fixed Deposits governed by the Post Office, Fixed Deposit. 13. Special Deposit Scheme, 1981. 14. Post Office Public Account up to 5,000 Indian rupees. 15. 7% Capital Investment Bonds, exempted only for individual of HUF. 16. 9% Relief Bonds, exempted only for individual or HUF assessee. 17. NRI bonds issued by SBI. 18. Notified bonds issued by public sector companies. 19. Gold Deposit Bond, 1999. 20. Interest on securities and bank deposit in respect of Bhopal gas leak disaster. 21. Interest on notified bonds issued by local authority. So, interest on the above-mentioned securities does not form part of total income of any assessee and it is not taken into account in computing total income. It is tax-free in the hands of all assessors. Exempted income. Here a brief account of exempted incomes is given for convenience of students to solve the practical problems relating to income from other sources. 1. Agricultural income in India. 2. Share in income of HUF. 3. Share in profit of partnership firm. 4. Post Office Savings Bank interest, exempted in case of single name 3,500 Indian rupees and joint name 7,000 Indian rupees. 5. All type of allowances received by MP Lok Sabha or Rajya Sabha. 6. Daily allowances and constituency allowance received by MLAs. 7. Scholarships. 8. Gallantry awards. 9. Interest on post office CTD accounts, 10 or 15 years. 10. Interest on capital investment bonds, relief bonds and certificates. 11. Dividend from domestic companies and mutual funds, for example UTI units income. 12. Family pension received by the family members of armed forces died in operational duties. Income of minor. Income of minor shall be included in income of his parents, mother or father, which income is higher, up to INR 1,500 in case of minor's income is exempted, so remaining amount shall be taxable. If the minor earns income from self-efforts, then such income will not be added to income of his parents. Exemption of 1,500 Indian rupees is available for every minor. Income of cricketers. Receipts by a cricket control board for plays for India are chargeable in the following manner. 1. Test matches in India, 25% of remuneration received by the player from the cricket control board for playing test matches in India is taxable. 2. Other matches in India, entire amount is not possible. 3. Matches outside India, 50% portion of amount received by an Indian cricket player for playing in foreign countries is taxable. Receipts of gifts without consideration. Gift received on the occasion of marriage from any person, or gift received from near a relative on any occasion is not taxable. However, gifts, cash or property, received from any person are taxable if the following conditions are satisfied. 1. The receiver is an individual or a Hindu undivided family. 2. The aggregate amount of such money or value of property received by an individual or HUF during a financial year from any person or persons exceeds 50,000 Indian rupees. 3. The sum so received does not come in the exception list. Following are the computation of income from other sources. Dividend from domestic company and dividend from units are tax exempted. Dividend from non-domestic company or cooperative society are taxable as it is. In securities, interest on tax-free central government securities are tax-free. Interest on less tax central government securities, and interest on less tax state government securities are taxable as it is. Interest on tax-free state government securities, interest on tax-free commercial securities, and others, taxability is on gross interest. In interest on less tax commercial securities, and others, two clauses are there. A. Taxable as it is if rate of interest is given. B. Gross if interest amount is given. Interest on bank deposit, up to 10,000 Indian rupees is taxable as it is. If interest is more than 10,000 Indian rupees and given net, such amount will be grossed up. Cooperative interest and dividend are taxable as it is. Interest on company deposits or firms deposits. A. If interest amount is up to 5,000 Indian rupees is taxable as it is. B. If net interest is more than 5,000 Indian rupees, taxability is on gross. In casual income, lottery and horse race, if net amount is given and such amount is more than 10,000 Indian rupees is taxable on net amount. In royalty, director's fees, article income, exam remuneration, taxability is on received income minus expenses. In family pension, received amount minus 1/3 or 15,000 Indian rupees, whichever is less. Income from subtenant is taxability on net income. Income from machinery, plant or furniture on hire is rent received minus expensed and depreciation. Agricultural income outside India, income from non-agricultural land in India, salary of MP or MLA, income from undisclosed sources are taxable. Cash gifts, if the aggregate amount exceeding 50,000 Indian rupees in a financial year, from other persons except relatives are fully taxable. Following is one illustration for income from other source. Thanks for watching EV Learning Tools. Keep watching our channel, subscribe our channel for updated informations.